Hello everyone. Welcome to a short discussion of how the financial statements work together. This is to tie together this chapter and show you all in one place how our financial statements, the four financial statements we've learned about, tie together and work together. They really need to be considered as a full set of financial statements rather than individually the numbers from them, and this is why, because they all influence each other. So I've got them here on this spreadsheet listed by in order that you would typically prepare them. First, you would do the income statement. We know that revenues minus cost of goods sold minus expenses. You could have other subtotals. This is not to show you a perfect, you might say, format for an income statement, but rather keeping it simple so we can focus on how it ties to the other financial statements. Notice that this is for a period of time, so it's for 2020, so that would be that it starts on January 1st and runs through December 31st of 2020. That means that this is a measure of the revenue that has been earned during that time period. And these are the expenses or gains or losses that have been incurred during that time period. Anything outside that time period is not included. So this is the net income that we have earned for the year starting January 1st running through December 31st. So when you're looking at financial statements, one of the things that it communicates is the time period. Now that time period should correspond with our statement of changes in stockholders' equity. Now the reference in your other places is the changes in retained earnings or the statement of retained earnings, to focus just on this column. But I want you to see that there could be other columns to our changes in stockholders' equity. But just like the income statement, they have a starting and an ending. However, we have a balance in here, and we note the changes. Notice this net income that got earned during 2020 becomes the change in retained earnings from the beginning of the year to the end of the year. All right? Dividends would then be subtracted. I don't have any amount there, but that would be a reduction in retained earnings. So you would have the change in retained earnings so that you'd have an ending balance. We have not learned about any changes in common stock or additional paid-in capital, which is another terminology you'll see for capital stock, which is what the textbook uses more commonly. All right, so once we have these numbers, these balances, then we can do a balance sheet for the end of the year. Notice a balance sheet, unlike the income statement and statement of changes in stockholders' equity, is for a single day. It is what we have, all right, a single day. Notice that total assets equal total liabilities plus total equity, or liabilities plus equity. This is what we have. These are the assets we own. This is the amounts we owe. This is the ownership by the shareholders at this particular day. Notice that day should correspond with the last day of our income statement and the ending balance of our stockholders' equity statement. All right, so where did these numbers, common stock, additional paid-in capital, retained earnings, come from? They came from the statement of stockholders' equity, or changes in stockholders' equity or retained earnings. Up here, this 50 comes down here, common stock or capital stock, okay? Additional paid-in capital comes there, and the retained earnings, which is the one thing that's going to change, most likely 42, that's the ending. So where did these beginning they came from the balance sheet from the year before. So this is the balance sheet at the end of 2020. There would be another balance sheet at the end of 2019, which is also treated as the beginning of 2020. End of 2019, beginning of 2020 is going to be considered the same amounts. All right, so these are what it is on this particular day, not the day after, not the day before, but what it is, what day, which means that any change to these accounts has been recorded, okay, for as of 12/31/2020. Now, the last statement is typically cash flow. So a cash flow statement, again, is for the year 2020. All right, there is 3 sections: cash flow from operating, or not giving any detail at this point, investing, and financing. Those add up to the changing cash. All right, our beginning cash would have been from the balance sheet that I did not show you. That's from January 1st or December 31st, 2019, or January 1st, 2020, same thing. Ending cash should match the cash on this balance sheet. So this is all the things that affected cash during 2020. So it explains the $13 in cash change from the beginning of the year to the end of the year. That's the point of a cash flow statement, is to explain all the changes in cash. Now you will notice some things that I did not include. For instance, your balance sheet should be classified between current assets and long-term assets. Your current liabilities should be separated between current liabilities and long-term liabilities rather than all being together. So, but that's a detail or a scenario that we'll consider in another podcast. So this was a very simple example to focus on how the financial statements work together, so that you see if process of preparing them and how they tie together